Welcome back. You're watching Dúchascopy TV. I'm Darren McDermott. Now, individual emerging market countries will have their ups and their downs this year due to normal business and political cyclical dynamics. But should we be concerned about excessive volatility in the currency markets? I'm joined today by Rani Jabban from Arab Bank. Rani, welcome. Pleasure having you in the studio.
Thank you for inviting me.
So, Rani, do you think we should actually be concerned, or is it a little bit irrational?
I think actually among both extremes are irrational. The complacency and very low volatilities are as irrational as extreme volatility on the other side. So actually it was quite good what we had since the month of May, June, when we had the first tapering issue last year, was quite healthy. I think the market was getting really complacent about the risks in the emerging markets. And now I think we finished the first phase, which is the short covering phase that we had since June of last year and the first month of this year. So now I would get cautious, I'll be cautious again to really pick the currencies according to their fundamentals and not about the valuation or the carry. So I would still be avoiding Turkish lira, South African ZAR, and I think on the Chinese currency, CNY, CNH, depending on the vehicle you prefer, we think there's still some weakness ahead around the 630, 632, where we try to rebuild the longs in China.
Okay, and now moving over to some UK news. Now, the pound hit a 5-year high last week on the back of really strong manufacturing data. Now, we're seeing so much strong data coming out of the UK, but are there some risks, such as housing, for example?
Yeah, I mean, there are risks. Sterling has been the star performer in G10 for the last 6-7 months. We think that we're really coming to a top now. So we're looking for levels above 170, 170.40 to go short sterling again. The risks are that positive surprises were there and lasted much longer than we expected, but we think now that's a lot factored in already, and disappointment are probable in the coming few months. Plus, on top of that, the structural problems in the UK have not changed and have not been solved. You got the housing market, you've got the balance of payments, you got the deficit, and all these problems will come back at one stage or another. So that's why we won't be going long sterling in these stages, but looking to initiate some short positions here.
Okay, and moving over now to the US and looking at the dollar. Now, are we seeing, how is it being affected by the crisis in Ukraine? Of course, with the Ukrainian hryvnia, with the ruble, they have been really suffering huge pressure. But what about the dollar?
Well, there are noises and news here and there about Russians buying the euro to avoid sanctions, etc. I think it's more anecdotal. It's not relevant if you look at the long term or the medium term. So, okay, in these markets, especially with the low volumes that we have, it will have an impact pushing the prices to 50, 80 pips higher, or holding the euro where it is and not having the euro weakness that a lot of people are expecting. On the ruble side, I think the weakness has started before the Ukraine started hitting the news and the page one and the headlines. We think that it's more structural. So the Ukraine crisis has accelerated the move. So there's probably a correction on the ruble down to 34.65 or 34.80, but we think the trend is also for a lower ruble. It's a general trend. It's not about the news. On the dollar side, the euro is holding really well in these levels. We think a lot of people capitulated on the long dollar positions that were initiated at the end of last year, or especially in the beginning of this year, and The only thing that is really against the strong dollar scenario at the moment is the fact that now that the positioning has disappeared, is the fact that the interest rate differential are really not moving in favor of the dollar, especially if you look at the 2-year curve. It's still largely in favor of the euro. And actually, in Europe, we're still talking about adding liquidity, quantitative easing, etc. But in practically, the ECB is actually removing liquidity from the market, and we have higher interest rates on the euro. So this is not how. This is why the euro is so supported at this time, and also we have the long positions in treasuries. They are there and still putting pressure on the yields staying low. We might argue there's a valuation problem in these terms. I think we'll take time, but we'll probably see the dollar stronger if the strong numbers are really confirmed in the coming month, and we think so. So it will probably take 1 or 2 months to see the strong dollar.
And what about Janet Yellen's speech this week? What are you expecting to see? How do you think the dollar will respond?
They will try again to put the expectations lower in terms of high interest rates. So even Fisher, who is known as a hawk in terms of being against the quantitative easing and all that, has said that it's not the time to talk about higher interest rates. But we think that they will try to calm down any expectations. However, I think the subject will come and will be forced upon them in the next 2 months.
Rani, thank you very much.
Thank you.
Right, well, thank you for tuning in to Dukascopy TV. That is all for right now, but do stay tuned as we have plenty more heading your way. See you soon.